Hey everyone, this is Hana and you're watching the Kiwi edition for How to Buy a House in Australia. Last week we caught up with our real estate agent and he talked us through the different things to think about when it comes to choosing your house. If you want to catch that or any of our other videos, you can find the link below. This is our final video for the series and we're just going to go through and look at the highlights and the top tips from each one. People will come over from New Zealand and they think that the process for buying a house is the same over here as it was back home, but there are some differences. For starters, in Aotearoa you can put your Kiwi saver towards buying a house, and the Australian government has considered doing the same with super, but they're still considering it. Another one about Kiwi saver is that once upon a time you could withdraw it and put it towards buying a home here in Australia, but they've since blocked that, probably because there were too many people abusing the system and they caught on to what was happening and ruined it for the rest of us.
My first tip when buying a property is to set up a separate savings account that's different to your normal spending account. It shows the bank that you've been making regular payments into that savings account and that you're going to be more likely to be able to repay the loan once you move in. My second tip is to avoid taking out personal loans, credit cards, car loans. A misconception is that it's a good idea to get a credit rating, especially for those that have just moved to Australia. But what it actually does is it means that you've got a higher expense cost, and that's going to hinder your ability to purchase a new home.
Through insurance you can put together policies that be able to protect yourself, your family in events like death, disability and sickness. Obviously for most Kiwis it's the she'll be right, we'll be fine, no worries at all. But that's not normally the case. It's just taking away that pressure that if anything does go wrong, you've got something in place that can help you out and help the family out. That's the big one. Because everyone insures their house, insures their home, insures their car, but the most important thing that they should insure is themselves. Because if you can't earn an income, or you hurt yourself, or you're no longer here, then you don't even have the ability to pay for those other insurances, let alone look after your family and your friends. So superannuation is a large pool of money that your employer contributes to and you can contribute to yourself. The money is concessionally taxed. It's really important that you take notice of it. You understand where it's invested, how much it's worth, who's contributing into it, because it's got the potential to be able to grow into something really significant. It has the capability of being one of your largest assets that you'll ever have in your lifetime.
One of the benefits of going through a project builder is that pretty much your hands off. You're not having to do your own forms or application. Basically all the headaches. We have specialist team at the back. Their roles are to talk to those shy liaison officers directly, to the developers, and get your approvals. You have agencies like Water Corp, you have the Shire, you have the developer that needs to approve the design, has to approve your colours sometimes. An engineer's report that has to be done in the house to confirm that it's structurally sound, as well as energy compliance as well, to confirm that your house is energy neutral, so it's not going to take too much power to heat that house, or it's going to be too influenced by the environment. So there are a lot of processes that the house needs to go through. Fortunately, as a project builder, all that's done behind the scenes and all the hard and heavy lifting has been done by us.
To be eligible for the first homeowners grant, you must be a natural person, so you can't be purchasing or building through a company or a trust. If you're buying and building the house by yourself or with someone else, at least one of you must be an Australian citizen or permanent resident. And just a reminder, if you're a New Zealand citizen, you're a permanent resident for tax purposes, so we tick that box. You have to live in the house for at least 6 months within 12 months of settlement. And if you're buying and building with someone else and either of you have owned a home in Australia before, you may not be eligible for the grant.
Just get out there, find the property you like, don't be afraid to make an offer. There's only 3 options: they can accept your offer, counter offer it or reject it, and as long as you're making some sort of a reasonable offer, they're not going to reject it, you'll at least get a counter offer. The other thing is too, if you're applying for finance, the bank's going to come in and do a valuation or get a valuation done on the property. You're not going to pay too much for the property, because if the bank don't see the value in it, you won't get your loan approved.
Remember that this information is all general, so if you're wanting specific information for your situation, get in touch with a professional or send us a message and we can point you in the right direction. and want to thank all the Kiwi businesses who jumped on board to help create this series. And Aotearoa will always be home, but it's good to know that there are good Kiwi business owners here who are willing to support and help guide us through the house buying process in our home away from home. And that's it from me. I hope you enjoyed this series and it gave you the confidence or the basic knowledge to work your way around the house buying process. But again, if you want some help or support, just flick us a message. Kia ora.